JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 17th of March 2021. So yep, welcome everyone. Welcome to this Wednesday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, as always, quick mentioning of our JFD YouTube channel, which you can always subscribe to in order not to miss any of our upcoming videos, and of course, our JFD Bank website, and specifically our JFD research page, which we also update on a daily basis. So yeah, feel free to visit us here on jfdbank.com. and click on the research tab right there on the top. Now then guys, jumping into the charts, the first one I want to pick up here on Nikkei 225. Again, not much has changed since the last analysis that I did here on Nikkei, excuse me. Basically the idea remains the same, that in order to go for some higher levels, we need that daily candle to remain above that psychological 30,000 mark, but as so far we're not really getting that. Yesterday we got a slight overshoot here, but still the index ended up closing below it. So yep, we're still waiting for that moment to happen, or should I say if it will happen, and if we do get that close above that 30,000 mark, then yes, higher levels could be met. But so far it's not really, let's say, going anywhere here, so that's why I'm going to keep it for now cautiously bullish. Shanghai Composite, so similar story here, still still waiting for that move above that that area around the 33,460 zone. So that's what I kept talking about yesterday, and yep, if we get that, then higher levels could be met. But so far the index is just kind of stalling here a little bit near this 100-day EMA shown as the green line. So yeah, we need to see a nice good strong push above that 3,460 zone in order to get a little bit more excited with the upside, and also to support the let's say the bullish case here. Well, we could probably see this little formation as a possible bullish pennant here. Again, we have our nice little pole here, and this little consolidation here could be seen as maybe more of a pennant. So again, that's not confirmed for sure, but of course something to keep in mind, and just kind of probably still mainly to keep an eye on this barrier, this resistance area could come in line with the bullish pennant idea as well, because and as you pop above this, then yes, could open the door to slightly higher levels. For the downside, I would need to see well, here this is a tricky bit, at least a move below the low of the 15th of March here near the 3,392 territory could do the trick for more sellers potentially. However, more sellers probably could join in if we get a drop below this 3,325 territory, somewhere around here, below the 200-day EMA, and then yep, further declines could be possible. But again, I do understand that this is quite a bit of a territory to be missing out here, but yeah, let's be on the safe side, guys. If we drop below this 3,392, then yes, of course, we'll consider a potential move lower here, but we'll still be very careful because it could reverse at any point here. Yep, we could maybe see this one kind of climbing back up. But again, let's be on the careful side for now. I'm leaning a little bit more towards the upside, but I'm cautiously bullish on this one. NASDAQ 100, the only index from the top 3 US ones that closed in the positive territory yesterday. Yeah, I mean, it traveled higher. It pushed above this 13,057 territory. I spoke about this level previously. As I said, that if we get a pop above this, we would also get a pop above the 21-day EMA here, shown as the yellow line, and then my next target would be this 13,302 zone, which is, as you can see, continues to act as a very nice area of resistance, and that marks the high of the 24th of February, near the high of the 1st of March, and near the high of the 2nd of March, and basically, in other words, this is the current highest point of March. So we got that move. We after a break of this 13,057, we got a break above that. So we managed to reach this already, the 13,300 territory. Now to be a little bit more on the safe side. Well, you probably now follow me. I mean, you understand where I'm leaning to. We would like to see a break above this area, above this hurdle, this 13,300 zone, because this could kind of strengthen the upside scenario, and this would confirm a forthcoming higher high and a new high for March as well, and more buyers could join in here. So be careful with that one. If we take a look at the cash index right now and where currently NASDAQ 100 is sitting at, let me just quickly push that one. Yep, there we go. We're sitting just around the 13,135 mark. So basically slightly below where it closed yesterday, but still above the 21-day EMA. So in a way, everything's still kind of, let's say, leaning a little bit more towards the upside. But if it's suddenly the index, starts falling below this little hurdle right here, the 12,758 territory, now that's where it could become a little bit more interesting for a few more sellers. Now, German DAX, here the index is stalling near this 14,595 territory. I spoke about that level yesterday. Today, the cash index right now is trading near the 14,544 territory. So slightly below where it closed yesterday, but still not far from that 14,595. In order to go for some higher levels, wait for that break here above this area, because again we want to be a little bit more on the safe side, and if we do get that pop above this area, then of course, yes, higher levels could be met. For the downside in the near term, I would say a drop below the Monday's low here near the 14,409 zone could open the door for a bit of a larger correction to the downside. FTSE 100, so I haven't looked at this one for quite a while, but overall it still kind of trades above this upside support line drawn from the low the 1st of December. So yep, we'll keep that on the chart for now, definitely. But as you can see, yesterday the index closed the session near this key resistance barrier. And let me just quickly put this one on the chart, guys. There we go. So that level is around the 6,802 area. Well, let's round it up towards the 6,800 zone. Yeah, for now, I mean, again, a similar story as with all the other indices. We need that clear break. The cash index right now is trading slightly below that area, below yesterday's close, the 6,800, and it's currently sitting near the 6,789 territory. So yep, for now, basically, long story short, we'll just have to wait here, and we'll have to wait for a nice, good, clear break above this area again, the 6,800 zone. If we get that, then my next target is the highest point of January, or in other words, the current highest point of this year, near the 6,904 zone, approximately around here, and then we'll take it from there, guys. Before we go further, of course, just a quick mentioning of what's happening here today with the economic calendar, and we do have a bunch of data here. Today's inflation day, so you have the Eurozone CPI figures coming out. Currently, the forecasts are sitting the same as the previous numbers, so you have any deviation from that might kind of trigger a bit of selling or buying, depending on how the figures are going to come out in, let's say, for example, euro dollar. So yeah, keep your eyes on that as well. And also we have the from the US. We have the building permits, we have the housing starts, so the those figures are coming out. If you like to watch those, then yes, keep your eyes on those today. But the Canadian numbers, that's what's going to be attracting attention today. Canadian CPI figures. So far, the core CPI year-on-year number is expected to decline. However, the year-on-year headline number is expected to increase slightly. So we'll see how that's going to perform, how that's going to play out. Certainly, the headline CPIs include oil prices. So yeah, I mean, we can understand why there's an expectation for a higher number, but again, let's see how that's going to play out, guys. So jumping into DXY, the dollar index, very quickly. Again, the same story here remains. If you remember, I kept talking about this level here, the 91.96 territory. We need that break above this area in order to get a little bit more excited with slightly higher levels. I'm not going to drag this one way too much to the upside, but slightly higher levels could be met. So the more it kind of struggles, let's say, to overcome this barrier, the 91.96, the more it proves to be a strong one. However, the more it stays near this area, the more chances there is for this index to break this hurdle. However, of course, don't get me wrong, I mean, if it continues to bang on the door here, but the door will remain closed, then yes, and a slide lower could be possible. However, now looking at this picture, the further kind of we moved more to the right, we had a shift of the EMAs here, and if you remember recently, from the beginning of this week, I said that if we get a drop below the 91.05 territory, that's what I'm going to be kind of looking for. That's when I'm going to be looking for the downside. But probably now we can say that if we get a drop below the low of the 11th of March here near the 91.36 territory, at the same time we would have the rate the price placed below all of the EMAs as well, and yep, potentially this could invite more sellers into the game. So for now, I would say that yeah, if we get a clear breakthrough one of these levels, that might determine the next kind of short-term directional move. Jumping into gold very quickly, so far so good. The 1740 territory continues to provide resistance. Let's see if it if it'll stay like this, together with this downside line drawn from the high of the 6th of January. If all this area provides resistance, and also we have the 21-day EMA here as well, which also could do the trick for more sellers here, because if this whole area does continue to provide resistance, then yes, a slide lower could be could be possible. However, if we get a breakthrough all this this resistance area right here, and then we get a push above the 1760 territory, now that's where it could become very interesting for more buyers, at least in the near term, because again, don't forget, we're still trading up below this downside line taken from the high of the 7th of August, so keep that in mind. Jumping into WTI oil, so I'm sticking to that little idea that I've mentioned yesterday. Basically, we could be seeing here a potential little descending triangle pattern here. You can see exactly what I mean. But yeah, again, for now, let's be very careful. Sometimes, of course, according to all the TA rules, these patterns tend to break to the downside. However, on the other hand, I mean, I just want to be clear. I want to get that break first before, let's say targeting slightly lower areas. But even so, if we do see a drop below this hurdle, then a move towards this upside, one of these upside lines here could be possible. So basically, still this move lower could be classed as a temporary correction. For the upside, I need to see a push above this downside line, and then yes, we could go for the current highest point of March near the 67.94 territory. Bitcoin Cash, very quickly on this, so drifted back down, and yeah, I mean, there is a bit of concern here among the buyers. However, there are probably going to be some buyers that are going to be loving this little area right here near near this upside support line, drawn from the low the 23rd of December, because for them this might be a good opportunity to step in. Excuse me. However, I would say that in order to get a little bit more excited with the upside again, I would maybe start looking at this 553 level, but to be honest, preferably, of course, a push up of the 600 mark could do the trick for more buyers. So, long story short, yes, this little territory right here could be an interesting one for the buyers. However, don't forget that we are now below the 21-day EMA. So, and the more tests of this upside line we get, the more chances for it to break. So, keep that in mind. For now, that's why I'm going to be very careful here and very cautious. For the downside, if you want to go for some lower areas, well, probably wait for a drop below yesterday's low here. This would, of course, already place the rate below this upside line, and yep, further declines could be possible. And yesterday's low here is near the 502.50 territory, so keep that in mind. AUDJPY, very quickly on this. So still not much is happening. I've mentioned this pair recently, and we're still keeping an eye on some of these levels. So this is just basically a very quick update on certain certain pairs that I've talked about recently, and just to see where we are at. So basically, long story short, for AUDJPY, I'm still, for the upside, I'm still keeping an eye on this 84.95 territory right here, which is the current highest point of, or actually not the current highest point, but the highest point of February. For the downside, I need to see a little break here of this upside support line drawn from the low of the 26th of February, and then yes, lower levels could be met. USDJPY, now this one's a very, very tricky one, because we are back to this 109.23 territory. Let me just double check that very quickly. Yes, that's 23. This is the high of the 9th of March. I do understand we've created some higher levels. We kind of had some overshoots here, but somehow still the daily candles are struggling to remain above this, the high of the 9th of March. So that's why I'm keeping this one on the chart. If eventually we do see that daily candle popping and staying above this area, then yes, we'll go for some higher levels. We do have some good potential targets here, like for example the highest point of June of 2020 near the 109.85 zone. And for the downside, I would say a drop below the 108.34 territory right here could do the trick for more sellers. So let's keep an eye on that one. GBPCHF. GBPCHF is very interesting because we've managed to break this upside support line drawn from the low of the 12th of February. Now, previously when I covered GBPCHF, I talked about this pair, and I said that in order to go for slightly lower areas, well, we would need to see a drop below this, well, a break of this upside line first, and then maybe a drop below the 1.2845 territory. And yeah, we did get that drop. We did move further south. However, as you can see, by the end of the day, kind of the bulls managed to lift the rate back above this area, back above the 1.2845, and now we're seeing a bit of a retracement. Now, of course, first of all, let's get rid of this upside line. No longer valid. Now the main focus will be here for the upside. We would need to see a push above this 1.29. Well, let's round it up here to 90. So 1.2990, that's what we would need to see a break off before, let's say, targeting higher levels, because such a move would confirm a forthcoming higher high and more buyers could join in. For the downside, now, given this activity, this recent activity, I would probably say that maybe a drop below this little target here, the 1.2780, could do the trick for a few more sellers. But of course, we'll keep an eye on the 21-day EMA there as well. And then, yes, of course, it will be interesting to see if we can actually drift further below that 21-day EMA. So far, everything's kind of a little bit on the, let's say, neutral side here for me, to be honest, because, again, it could reverse nicely here to the upside. It's currently is reversing, but still, I would say I need to see that pop above the 1.2990 level in order to get a little bit more excited with the upside. Euro Aussie. So haven't looked at this one for quite a while, but just wanted to kind of quickly run it by you. Basically, we're still trading below this downside line, taken from the high of the 20th of October. So this medium-term downside line is still intact. Now after last test of this line on the 26th of February, the pair started drifting lower, but not really kind of, let's say, strongly to the downside, because we can see that over the past, kind of since the beginning of March, it's kind of slowly drifting lower, still remaining not far from that 21-day EMA, occasionally testing it, and it's not really kind of getting closer to the lowest point of February, near the 1.5253 territory. Now, this, of course, kind of points to the idea of a potential bullish flag here. However, again, don't get me wrong, I mean, this might be a flag or it might not, but so far, I mean, we have our little nice pole here. We have a little decline here, so yep, everything's kind of looks like a nice bullish flag. Or in a way, if you don't see a flag here, another thing that we could see could be maybe a falling wedge pattern. So yeah, I mean, according to all the TA rules, of course, these patterns tend to break to the upside, and yep, for now, I mean, this we could look at this as well in this way. I mean, as a potential falling wedge pattern here. If however, in all this, even in the bullish flag or the falling wedge, still we would need to see a break, a nice good strong break above this downside line taken from the high of the 20th of October. For now, we're not really getting that, so in a way that means that the pair could continue moving kind of, let's say, up and down here, but with a slight tilt to the downside within this pattern. So that's why be very careful with this idea of a potential falling wedge or a bullish flag. Still, certain criteria here, certain breaks need to be met in order to go for some higher levels, and one of the criteria here for me will be a push above this little hurdle here, this 1.5478 zone. So again, of course, depending on where we're going to be today or tomorrow, maybe this level could come in perfectly here, and we could see a break of this downside line and a push above this barrier, and everything could work out nicely. But let me pick up on this pair a little bit later. Let's give it a bit of time, but like I said, something to keep on your radar, on your watch list, because like I said, this could be quite interesting. In case this suddenly drops lower here and breaks the lower side of the wedge here, then of course we're scrapping any kind of potential bullish idea here, and if we see a drop below the 1.5253 territory, this will confirm a forthcoming lower low, and further declines could be possible. Euro USD, so the pair is still trading below the 1.1910 zone. So if you remember, yesterday I've talked about this little idea of a potential kind of descending triangle pattern here, which according to all the TA rules tends to break to the downside, and well, everything worked out according to the rules. So we had a drop here below this area, below this 1.1910. Currently we are still seeing the pair trading below this area, so in a way it could still lead to some lower areas, lower levels, but preferably now I would like to see a drop below yesterday's low near the 1.1880 territory here, just to be a little bit more on the safe side. And if we get a drop below this will confirm a forthcoming lower low, and yep, our next target here could be this the current lowest point of March near the 1.1834, and then we'll take it from there, guys. So that's it for this session. I hope you found it useful. Thank you very much for joining in and watching this one till the end. I really appreciate appreciate your time, your likes, guys, your views, and yeah, I really appreciate you being here. So thank you very much. Join my video later on. My trader's tea time is always 13:30 GMT. For now, have a wonderful, wonderful trading day. Stay safe, and I'll see you later. Thank you very much, and bye-bye.